Welcome back, investors, to Ticker Time News. I'm Adam, and the S&P 500 fell 0.6% on Wednesday as the markets were pressured by profit-taking amid a bit of buy the rumor and sell the news on a timely Russia-Ukraine ceasefire, because that's what propped up the markets yesterday. And today, we had to collect on that. There wasn't really a ceasefire. The Nasdaq dropped 1.2%, the Russell 2000 slid 2%, while the Dow Jones only declined by 0.2%. Now, looking at the chart, this is the S&P 500 daily view on the chart here. We are at a point where we need to cool off for a bit, right? We cannot continue this straight back, snapback rebound all the way to our target of this top yellow box up here at 4,819, because that would set a new all-time high at 4,819 on the S&P 500. Now, the RSI down here is at the top. It's stretched out. It needs to cool down. It's at a 68.9. Yes, it could go higher. It could get into the 80s. It could even get into the 90s, but that's not typical. So we're likely to see a little slowdown action before we resume to all-time highs. That's my belief. If we look at the money flows down here, it's also stretched. It is at a 73.6 right now, today. Now, yes, it could go higher, but this is typically where it maxes out, right? So we need to cool off a little bit, allow the RSI to settle down, allow the money flows to settle down, maybe move sideways a little bit. And even though today was a red day, there was some very encouraging, I'll call it teeter-tottering. And let's look at the 5-minute chart real quick. 5-minute chart on the S&P 500 today. Remember, we got to session highs by 10 a.m. Eastern, and it was downhill from there until one point. Now, remember, this yellow box that's like right here in the middle, the red line in the middle of that box is the support resistance line. It's at 45.90. Yesterday, we came down to this line 3 different times, and we bounced off of it, which was a very bullish sign. Today, when we got down to this line, okay, right here at about 315, we dipped below it. It didn't hold up as support. We fell below it, and we had actually 2 pretty big candles for a 10-minute period of time. Remember, each candle represents 5 minutes. But something interesting happened is once we got below that, the S&P 500 got to a low of 45.81. And if you remember, for the past couple of months, when I was talking about our snapback rally target, I said 45.80 to 45.90. And what did it do? It got down to 45.81, and then it bounced back above to close above the 45.90 mark. So even though we did technically dip below this line at 45.90, we stayed above the 45.80, which would be like the zone, right? That 10-point zone that we would need to stay in. And then we bounce, we close, we're back to 46.02 on the S&P 500. Now, on the Nasdaq, then the ticker symbol is IXIC on TradingView to look at the Nasdaq. Here we are at this top line. And this top line, remember, back here on February the 9th, which is right here, and on February the was that the 2nd? Yeah, the 2nd right here. Those were 2 days where we got rejected on this line of 14,493. So yesterday we broke above that and we closed above that. Today we sunk just below that. So if we picture a zone for the Nasdaq, then it's sitting right in the support resistance zone right this moment. So even though there was a sell-off today, you have to imagine after a run-up like this from the 14th, right, of March, when we hit that low right here, and that low was 12,555, right? And we're at 14,442 right now. That is a big gain, and you do expect profits to be taken after a big gain like that. Now, I do think this will continue, but I also do find it interesting. The 200-day moving average is like running parallel right now to this zone that the Nasdaq is holding in right now. And again, the RSI down here for the Nasdaq, it needs to cool off. It's running hot. Money flows, however, they've already dipped a little bit today. And again, that's just showing a lot of profit taking occurred for the Nasdaq today. But it's typical. You can't just have a big run up and then, it's always green. No, we have red in between, a bunch of green. So that's looking good. Now, on the Dow Jones, ticker symbol is DJI. It's also sitting in a zone. Now, yesterday, it gapped up above its 200-day moving average, which is very positive. It's already above its 50-day moving average as well. It used that as support about 4 sessions ago. Today, though, it held above this support line, above the 200-day moving average, and that support line looks to be right around 35,055, okay? So it is holding up above that, and it's in a zone right now. As long as it can stay above that 200-day moving average, that would be a very positive sign for the Dow Jones. Now, on the Russell 2000, ticker symbol RUT, to look at the Russell 2000, and you're going to see something very similar to all of these. Look right here, March the 22nd, March the 23rd, March the 24th, March the 18th here. These were all of them, they got rejected on a very specific line. That same line where it was rejected here on February 16th, it was rejected here on February 10th, rejected here on February the 9th. We closed above that today. That's a good bullish signal. It's a positive signal, right? So the Nasdaq, the Russell 2000 is in a zone. So looking at the S&P 500, the Nasdaq, the Dow Jones, and the Russell 2000, all of the major indices are in a zone of support right now. And as long as we don't get any major crazy headline news, then we should continue in our upwards trajectory, okay? The trend has reversed. We are in a uptrend right now, and I do suspect that we will be moving up and not down in the short term, okay? Remember yesterday we talked about the yields inverting, and there's been a lot of articles written in the past 24 hours about what does that mean, because every time the yield has inverted, we've had a recession in 6 to 24 months. Now, there was one time, my wife corrected me, there was one time when we had yields invert and we did not have a recession. That was 2019. And that is true. We did have the yields invert and there was no recession. That's because the Fed stepped in and quantitative easing, baby, they poured tons, billions, maybe even trillions of dollars into the market. And all they did was postpone our recession. So I still believe, I'm in the camp that a recession is imminent and it is in our future. And I don't think there's much that we can do to reduce it or reduce the probabilities of it happening. Okay, back to the market today. So Russia refuted yesterday's reports that described a breakthrough in peace talks and appeared to redirect troops to eastern Ukraine to focus on the Donbass region. Now, the news contributed to a rebound in oil prices of 3.2% to $107 a barrel. And this is what I was talking about at the very beginning. Buy the rumor, sell the news. In the market, we bought the rumor yesterday that Russia was going to advance peace talks. Today, we sold the news of Russia denying that report. That's one of the reasons. Plus, profit taking was one of the biggest reasons why we cooled off in the markets today. Now, the news also functioned as an excuse for the stock market to cool off, right? As I've been saying, from a huge rebound rally in which beginning the session today, at the very beginning, at the open, the S&P 500 was up 11% since March the 14th, and the Nasdaq was up 16.5% since March the 14th. So those are very big gains to just leave out on the table when we have a headline like Russia's not going to pursue peace talks, or some crazy, any type of title that produces any type of fear in the market, right? So of course there was going to be big profit taking today. We could see that in the headlines early on. Now, losses were concentrated in the S&P 500 information technology, that was down 1.4% today. Consumer discretionary down 1.5%, and financials were down 0.7%. But energy, that was up 1.2%, utilities up 0.8%, healthcare and consumer staples both up 0.2%. Those were the sectors that closed in positive territory today. Now, the financial sector was undercut by weakness in the bank stocks amid the, I guess what I would say, the compression of interest rates, which continue to signal concerns about the Fed policy and their mistake. The SPDR, SPDR, S&P 500 Bank ETF, ticker symbol is KBE. That dropped 2.75% today, showing how the banks were in a bit of trouble today. And here's something to think about for the financial sector. IPOs, initial public offerings, first quarter have plunged to their slowest pace in 6 years, as falling stock prices coupled with the Russia-Ukraine war effectively put an end to last year's boom of IPOs. So that's millions, if not billions of dollars the banks will not be getting in revenue this year. Now, the 2-year yield decreased 2 basis points, and we can look at that going to US 02Y on TradingView, and there is a link in the description for a free account to TradingView, but you can get up to 30 credits with TradingView if you do sign up for a paid account. Now, we can see here that the 2-year is at 2.312% right now. And then the 10-year, and you go to that US10Y for the 10-year and choose the top one, the TVC, as your source. And you can see that the 10-year is at 2.358% right now. It did decrease 4 basis points today. Now, looking at the 210 spread, which inverted yesterday, and you can look at that by going to US10Y, and then you're going to minus the 2-year, which again is US02Y on TradingView, and that shows you the inversion or not, right? It's taking the 10-year and subtracting the 2-year, giving you what's left over, okay? So looking at that, you can see it's improved a little bit from yesterday. They're not as tight together, and they're not inverted at the moment. So yesterday was the day that the 210 inverted, and again, that usually signals a recession in 6 months to 24 months. So we got that. All right, let's look at a few individual stocks. First up is Micron. Ticker symbol is MU. Micron drops 3.52% today, despite reporting, and I'll pull the earnings up right here, despite reporting better than expected earnings results and guidance. So we have EPS coming in at $2.14 a share. That's up 8.2%. On revenue of $7.78 billion, and that's up 3.39%. So really good earnings for Micron. Guidance, it wasn't bad, right? but they dropped 3.5%. They're up 0.3% in the after hours for what it matters. Now, on Micron, they have got a very interesting zone right here, a top resistance area at about $84 to $85 and a support area right around $81, $82 a share. Now, that zone has had lots of reactions in the past. It kind of broke down when we had these big drops on March the 4th and March the 7th. But it has rebounded since reaching the March 14th lows. But today, after getting back into that zone yesterday, today it just completely fell apart and out of that zone. Okay, shares of Chewy, ticker symbol CHWY. Investors love the company and they really want the company to succeed, but it's just not working out. Shares continue to slide after the company reported earnings that missed for Q4, as well as extremely underwhelming guidance. The shares were down 16.1% during regular session, down another 30% in after hours. And look at these earnings. Let me pull this up. They came in with an EPS of a loss of 15 cents a share, which missed the mark by 136%. And they came in with revenue of $2.38 billion, which missed by 1.4%, or $34.9 million. That's almost in line, but it is still a 1.4% miss on revenue. So not looking real good for Chewy. Guidance also was not spectacular for them. Without the strong tailwinds that the pandemic provided, and with more powerful supply chain headwinds to contend with, the pure online pet food and products company struggled to exceed earnings expectations for the third straight quarter. The pandemic-fueled darling of a stock is stuck in the doghouse for now, as far as I'm concerned. I'm going to wash my hands with Chewy, and I'm staying away until they can actually prove that they can turn things around. If you feel that way, awesome. If not, maybe you'll consider it. And if you have a differing opinion, let me know in the comments what you think about Chewy and whether it's worth investing in, worth staying in the fight, or, should you maybe sit on the sidelines with it? Let me know your thought. Okay, on the other side of losing, we have a winner, and that's Lululemon, ticker symbol LULU. Lululemon, it stood out with a 10% gain on not just positive earnings results and revenue that was kind of in line. We can call it, they had revenue of $2.12 billion. And estimates were $2.13 billion. So $5.3 billion difference, 0.25% off. That's in line if you ask me. But earnings, that was up 3%, or EPS, right? Earnings per share. So they also had upbeat guidance. And on top of that, and this is the kicker, a $1 billion share repurchase announcement. Whenever companies announce a share repurchase program, that's a reward to investors for being an investor in the company, because that helps a share price to appreciate or go up. And it did today, about 10% for Lululemon. All right, smash that like button, share this video, and beat the market with us by clicking the first link in the description. And if it's your first time watching, click subscribe. For Ticker Time News, I'm Adam. Thank you so very much for watching, and I'll see you in the next video.